Ooh.
The study on stock market crashes. Hello, my amazing friends. Welcome back to Mancy's Stock Market Secrets. I'm your host, Mancy, your stock market tycoon and human psychology enthusiast. Oh my gosh, I'm buzzing with excitement to share another game-changing secret with you today. We're diving into the magic of the monthly RSI, the 14-month Relative Strength Index, and how it can help you navigate market crashes like a pro and build serious wealth. I've studied every market cycle, devoured books like The Intelligent Investor and Trading in the Zone, and today I'm spilling all the tea, step by step, with juicy examples and a sprinkle of my own lessons learned. Plus, I'll throw in a fresh perspective. Does RSI always get it right? Spoiler, it's not perfect, but it's powerful. So, grab your coffee, get comfy, and let's dive into this thrilling journey together. Step 1. What is monthly RSI? Let's keep it simple. Friends, let's start with the basics. The Relative Strength Index, or RSI, is like a thermometer for the stock market's mood. It measures how fast prices are moving and whether the market is too hot or too cold. We're focusing on the 14-month RSI, which looks at price changes over 14 months to tell us if the market, like our beloved Nifty 50, is overbought or oversold. Here's the deal. RSI goes from 0 to 100. Above 70, the market's overheated. Think warning bells for a potential crash. Below 30, it's oversold. Time to hunt for bargains. Anywhere between 30 and 70, that's the neutral zone, like a calm sea. Picture this. In January, the Nifty's RSI hits 75. Uh-oh, it's getting too hot, so maybe brace for a pullback. By March, if it drops to 25, that's a signal the market's oversold and it could be time to buy. But here's the twist. My analyst friend says, Mancy, a high RSI doesn't always mean a crash. Sometimes it's just a strong trend. So we can't lean on RSI alone. We need to check the trend in volume too. More on that later. Step 2. What's a market crash? Don't fear the drop. Okay, friends, let's talk about the scary stuff, a market crash. When the Nifty 50 drops 20% or more from its peak, we call it a bear market. It sounds terrifying, but it's just part of the game. I'll never forget my first trade in 2015. My heart was racing when the market dropped, but I held on and learned. A crash is like a massive sale at your favorite store. Prices tank, but if you shop smart, you can score big. RSI helps us spot when that sale starts and when it's time to grab those deals. For example, in March 2020, during the COVID crash, the Nifty fell from 12,246 to 7,511, a whopping 38.6% drop. People panicked. But those who saw the RSI hit the 20s and bought quality stocks like HDFC Bank, oh, they were smiling by November. Crashes are emotional, but RSI keeps us grounded. Step 3. History lessons. What crashes teach us? All right, let's travel back in time and look at some epic market crashes to see how RSI played out. These stories are gold for any trader. 2008 global financial crisis. Picture this. 2008, the world's in chaos with the Lehman Brothers collapse. The Nifty 50 peaked at 6,357 in January and crashed to 2,252 by October, a jaw-dropping 64.6% drop. The RSI, it screamed 85.8 in October 2007, super overbought. Then it plunged to the 40s and below 30 by late 2008. That low RSI was a hint. The market was oversold, ready for a comeback. But here's my take. Panic and crazy high selling volume made that drop so fast. If we checked volume with RSI, we'd have seen the storm coming. 2015-16 market correction. Fast forward to 2015, the Nifty went from 9,119 in March to 6,826 in February 2016, a 25.2% drop. RSI peaked at 80.80 in November 2014, flashing a warning. By the correction, it was in the 30s, 40s, sometimes dipping below 30. This wasn't a full crash, more like a slow burn, driven by China's slowdown in oil prices. My analyst buddy says we should have looked at the trend, like the 50-month moving average, to confirm the downtrend. Lesson learned. 2020 COVID crash. 2020, what a wild ride. The Nifty dropped from 12,246 in February to 7,511 in March, a 38.6% plunge in 1 month. People panicked, but those who saw the RSI hit the 20s and bought quality stocks like HDFC Bank, they were smiling by November. Crashes are emotional, but RSI keeps us grounded. 2024-25 decline. Now let's talk about today's market. In September 2024, the Nifty hit 26,277, then fell to 22,124 by February 2025. Mid-caps, though, they fell over 20%. RSI was 83 in September 2024, overbought alert, and now it's in the 40s, 30s. This decline is ongoing, friends, so stay sharp. Mid-caps are more volatile, so their RSI moves faster. Keep an eye on volume and economic news to see where this goes. Step 5. RSI patterns. What's the secret sauce? Let's break down the patterns I've seen with monthly RSI and a little pushback from my analyst friend. Before a crash. RSI often climbs to 70 to 80 or higher, like 85.80 in 2007 or 83 in 2024. It's a red flag for a reversal, but my analyst says, Mancy, it could just be a strong bull run. Fair point. Check the trend first. During a crash, when the market drops 20% or more, RSI hits the 30s, 40s, sometimes below 30 in deep crashes like 2008 or 2020. The speed of the drop matters. Panic makes it faster, like in 2020. After a crash, RSI below 30 is a recovery hint. In 2009, post-2008, low RSI signaled the bottom, and patient investors made millions. But sentiment and economic data must align for a true rebound. My take, RSI is awesome, but it's not enough alone. Pair it with trend analysis like moving averages and volume to see the full picture. Oh, and don't forget sentiment, like the VIX for investor mood. Step 6. Your toolkit. Trade like a pro. Ready to take action? Here's how to use monthly RSI to master crashes and build wealth. 1. Track monthly RSI. Use platforms like TradingView or Zerodha to check the Nifty's 14-month RSI. Set alerts for above 70, sell warning, or below 30, buy signal. Example, if RSI hits 75, review overvalued stocks. At 25, hunt for gems like Reliance Industries. 2. Check trend and volume. Look at the 50-month or 200-month moving average to confirm the trend. High volume with a falling RSI means a strong sell-off. Low volume with low RSI might signal a bottom. In 2020, high volume confirmed the crash's intensity. 3. Diversify. Spread your money across Nifty, mid-caps, and safe bets like gold. During 2024-25, mid-caps tanked, but gold often shines in tough times. 4. Stay calm. Use RSI and data to keep emotions in check. Don't panic sell when RSI hits 30 like in 2008. Wait for the recovery. 5. Plan ahead. Keep 10 to 20% cash to buy during oversold conditions. In 2020, cash-ready investors scooped up bargains when RSI was below 30. Let's build wealth together. Friends, monthly RSI is like your compass in the wild stock market seas. It spots overbought and oversold moments, but pair it with trends, volume, and sentiment for the full map. Look at 1929, 2008, 2020. Patient investors who bought when RSI was low and held on built empires. Start small. Track the Nifty's RSI on TradingView. Set alerts and share your findings with friends or on X. You've got this. This podcast comes straight from my heart to yours. Your love and support keep me going. So please like, share, and subscribe. Hit that bell icon. Let's keep learning and trading smart together. Until next time, stay happy, stay curious, and trade like a tycoon. Love you all. Don't forget to like, share, and subscribe to my channel. Bye-bye.